Today, we have Makaran Joshi, co-founder and CEO, Credit OS, Ruchi Agarwal, CEO, National Insurance Bima Seva Cooperative Limited, Mohit Sharma, CRO, 5, and Urmila Dalvi, Head Strategist Alliances, One Stack Solutions.
Okay.
I would now call Shramni upon the stage to distribute the mementos.
Thank you.
Am I audible? Yeah, good morning everyone. My name is Makaran. First of all, thank you Gokhale Institute, Professor Mishra ji, thank you P2C Communications, Pravas ji, for providing us with an opportunity to participate in this event. Proud moment for me, especially because I'm born Punekar, born less than a kilometer from here, spent all my formative years here. Today's topic is FinTech financing and risk management in cooperatives. The topic is broad, but we have organized ourselves to cover subtopics in the same domain. So I'll start with credit risk infrastructure for cooperatives for financial inclusion. Then my colleague Urmila shall go with how technology can enable better customer experience and better banker experience for the cooperative banks. Then Mohit from 5, he'll address the situation of how technology can enable unsecured lending even at a fast turnaround time and safer lending. And then Ruchi ma'am, she'll touch upon the topic of how technology can enable a safety net for the underserved informal sector using insurance products. So with that, maybe I'll start with my own presentation. All right. So as I said, my name is Makaran. I represent Cofinity Systems, but we go by the product brand Credit OS, or short for Credit Operating Systems. The topic that I'll be covering today in under 10 minutes, that's the limit for everyone, is financial inclusion by strengthening cooperative banks. Right. So narrowing down the financial inclusion to these two segments, micro and small enterprises and individuals, essentially that is the segment touched by cooperative institutions, be it rural or urban, and I will focus on that segment and how cooperative strengthening using technology can actually lead to inclusion is what I'll cover. So the inclusion problem, the data is out there, everyone knows, I have taken it from CIBIL report and everything. So 48 crores underserved and 16 crore unserved. These are the individuals that represent about 50 plus crores out of our total 148 crore population, 1/3 of the segment. The second most interesting part, we have about 6.5 crore MSMEs. 99% of those are micro and small enterprises, and they still remain without due credit. And how we can address that gap is something we'll see in the next couple of slides. The last point here, and which will lead to Urmila, your segment, is 40% of these guys, the people who will be looking for credit, are Gen Z, right? They are coming of age and they'll be looking for banking solutions and credit and insurance, and they are tech savvy. So having technology in place will eventually get that new customer in for the cooperatives. So this problem of inclusions exists even with a lot of contribution by MFIs, microfinance institutions. they are lending about 3.5 lakh crores, which is the same size of the outstanding loan portfolio as of UCBs. But still, the gap for MSME or MSE sector exists. I mean, the estimated gap is 25 lakh crores, but and almost 20% goes to micro and small enterprises. The common factors being the cooperatives using legacy systems, they cannot lend credit safely, they cannot lend credit fast enough, and they cannot track credit to get the NPAs down.
Yes.
But why the cooperative institutions matter? We are all a part of this cooperative sector one way or the other. We know the numbers. The urban cooperative banks, they are serving 9 crore members. The PACs, 83,000 of them are serving 5 crore. So that's 10% of India's population. Adding RRBs and other rural banks is even greater number at the at the last mile that we are connecting using this channel. So if we strengthen this channel by better credit risk infrastructure, we think that we can come up with a stronger solution for financial inclusion rather than creating a new channel for distribution of money for the underserved. Now, why this is a very, I think, very impactful slide, comparison between PSUs who are our economy's backbone and cooperatives, especially the UCBs. The credit to deposit ratio for PSUs, it stands at 80%. The credit to deposit ratio for UCBs, it stands at 62.5%. That's a gap of 17-18%. Even if we increase the ratio of the CDR ratio from 62.5 to let's say 75%, 12-13 point increase, it will mean, based on last year's data, it will mean something in the range of 70 lakh crores of available funds right now. If we have the better credit assessment and credit risk infrastructure, that can be lent out immediately without doing anything else. Then two other numbers for comparison. The bigger giants, PSUs, are growing at the rate of 20% year on year, whereas cooperatives, they are doing it at 16% over 5 years, but the rate of growth is slowing down. Last year it was only about 4 to 6%. The growth is essentially the credit that goes out, and the safety, or rather the growth of health of the bank is about the credit monitoring part. So I am referring to credit risk infrastructure in this broad topic. Now, this is where we come in. We want to create a credit risk infrastructure of tools, systems, and workflows that can address credit assessment for banks and also the credit risk monitoring part. There are three main points that banks need to cover. First is better assessment, second is lower cost per lending, and third is better monitoring so that their assets are recovered. We create these three type of, at CreditWise, under one product brand, we create these three type of products. One is what we call FinStruments, FinSystems, and FinStandards. Without going into much details, what we are trying to create is easily adoptable infrastructure, be it UCBs, RRBs, DCCBs, for first of all quicker assessment of loan applications, safer assessment so that the credit, whatever is lent out, is based on sound decisioning. Second is standard digitized systems so that the cost per lending goes down. And third is better monitoring. We have all the cooperative banks have that SMA movement infrastructure covered, but going beyond that, the early warning systems so that they act in advance to lower the risk of NPAs is something that we are trying to build. This efficiently addresses the MSE inclusion part, because thin file MSEs, new to credit MSEs, these are flocking to cooperative institutions first. The demand is there by going by the report Sahakar Trends released by NUCFDC. They say that the new to credit MSEs are first going to UCBs rather than PSUs, but the conversion ratio of loans loan applications to loans is far lower. 23% is approval rate for UCBs and 30% for PSUs. So even this 7% gap, if we have better credit assessment technology, which goes beyond standard CIBIL. CIBIL as in the CIC scores have to be there, which address the liability part, but based on your cash flows, based on your current assets, if we can go beyond that and enable credit, then we are serving even better and wider segment. I'll skip couple of slides. I am now showing the impact that I was referring to earlier. So 70,000 crore funds right now. If we imagine 1 lakh as an individual ticket size for loans, maybe Mohit will have the accurate number for unsecured lending. That's still 70 lakh individual loans or 23 lakh MSE loans. Right now, with available funds, but with better use of technology, we can address the same. And yes, this is what we plan to, envision or make the impact at the cooperative segment. We are just in our first year, but we are getting good traction. The likes of NUCFDC, the likes of Sahakar Sarathi are supporting us in this endeavor. And I hope that next year when we'll convene, we'll have the actual impact shown here as part of this presentation. Thank you. So, as the next speaker in line, Urmila, if you can come up here, your presentation should be arranged.
Good morning, everyone. Can you hear me? Yeah. So, my name is Urmila Dalvi. I represent OneStack. OneStack, we are building for Bharat. And our vision is to make every Bharat bank a neo bank. When I'm saying neo, it's digital ready bank. Currently, we are working with 200 plus cooperative banks across the country, managing their 50 lakh customers. And, but they can hear me. Yeah. So, I'll just repeat the line again. So we are working with 200 plus cooperative banks across the country, managing their 50 lakh customers and dealing with their 1400 branches on a daily basis. So this is what we are doing from last 5-6 years from the inceptions. We have given a white label mobile application to these banks. We have provided core banking solution and various digital products like UPI, IMPS, CTS, AEPS, etc. We are also providing them the Soundbox solution, which is a voice notification after payments, which is into 16 regional languages. We are a certified, NPCI certified ASP, which is an application service provider and technology service provider for Bharat Connect. So this is what we do as an OneStack. Let me just discuss some of the challenges which cooperative banking sector is facing in current days. So the first is customer experience. So customer experience, which as my friend Makran said, the Gen Z or customer like us who are 90s or 80s customer, they also want everything on their fingertip. So they don't want to visit the branch like earlier we used to do. So now everything is required on their mobile phone, and cooperative sector has to shift their vision from getting into branch approach, a branch-led approach, to a mobile-first approach. So this is the most important thing for changing the customer experience. The second is business model. So earlier the bank was, or a banking is known for lending or for deposit. So this is the only work we think in our mind, that if we think bank, it is only for our FD or RDs, or it might be providing a lending services like personal loan, home loans and other things. But nowadays banking is some beyond this to a task. It is completely shifted from lending institution to a financial platform which is required in the market right now, and people want from the bank they should get a super app kind of a platform where they can do all their financial transactions. The third is technology, which is a challenge, and for technology is challenge just because technology is costly. This is something there in the market, that technology is very costly. It is very costly to manage also. So technology is something which is lagging very behind, because the cooperative banks nowadays are using a legacy system which is difficult to transform for a digital platform. So this is a third challenge. A fourth is regulatory compliances, because lot of regulatory requirements comes on a daily basis. We see some of the circulars from regulators comes up, some from NPCI has come up. So this is a most important and challenge which cooperative is facing right now. What we suggest is growth is very important in banking sector or in finance sector, but growth with governance is something which is required, and that is what we support. Fifth one is visibility, which you cannot see on this slide, but visibility is something very important. Just wanted to quote one sentence for this: visibility. If your customer's mobile phone does not have your application, then you are invisible. So visibility in the market is very important, and you have to cope up with the requirement of the market. So this is the challenges which cooperatives are nowadays facing. Going to opportunities, so we are discussing the market which is not a niche market or not a niche segment. It is a very important segment, and it's a Bharat's banking engine. So we are talking to that ecosystem right now. We are talking about a number which I will be putting two numbers here, which is contradictory. So please be here. So I am saying 35 crore customers are individual customers, and 6 crore MSMEs are trusting or liking or working with cooperative banks. They want to work with cooperative banks. They prefer cooperative over PSUs and private sector, which is actually 50% of India's bankable population, which is a huge number. 50% of India's bankable customers. But in contradictory to that, we have seen 25 lakhs crore transactions has been done for UPI digital payments in last month, which is a data by NPCI. Out of that, only 35,000 crores are processed through cooperative. So contradictory is, if 50% of bankable customers are using or want to trust cooperative bank and using cooperative bank as their banker, then why the number is not showing in digital payments? It means they are not getting the proper technology or proper platform. They are using the bank only for lending and depositing. There is a huge gap, and we as One Stack, we want to bridge this solution with our solutions which we offer. Yes. So I'll just skip this because I have already said what we are doing. We are working with 200 plus cooperatives and all. So this is, we have got eKYC Setu certification also done through NPCI. We have Aadhaar verification seeking entity registration done for One Stack. We are working with UIDI very closely on that. We are working with DigiLocker for DPDP compliances. These are some of our mobile application, white label mobile application, which has been provided to all the cooperative banks whom we are working with. And these all are available on M-Seva app, which is government's India government app store. This is the sound box which we provide. So this is the one and last slide which I wanted to tell you, that what we are doing, what all products we are providing to bridge this gap, which we have talked in my earlier discussion. So mobile application, payment services, and sound boxes. This is the products which we provide in the market. We have our own connectivity with NPCI, so we are a switch company. We provide UPI, IMPS, CTS, APS. These all products which are by NPCI, we are having a connectivity and we provide these services to the banks. We have our own core banking solution, We have an RBI reporting module also, which actually helps bank to file their reports to RBI on a recommended format and on a recommended timelines. There are some of the products which is WIP, you can see on the slide, which is AI banking. We are working for in artificial intelligence sector also for banking. We are working for virtual banking also. So some of the products which are there will be live soon. So I just wanted to end up my discussion by saying one thing. India's next digital growth wave is from Bharat, not from metro. Thank you.
Hi, good morning all. My name is Mohit Sharma. Let me just use 2 minutes to introduce myself to you guys. This is the first time I have been involved into the cooperative sector forum or discussions. Actually, not been in my career also in the cooperative sector, but yes, of course, the numbers which I just saw over there, the kind of opportunity which this sector has, and I am finding that with this additional ecosystem is making them ready to compete with the FinTech space. So I am chartered accountant by qualification. I have had my experience in the finance sector itself. Like I started my career with ICICI Bank, then I worked with Bajaj Finance. Then after that I joined FIBE. FIBE is a NBFC, which is the name of Early Salary Services Private Limited. We are a 10-year-old organization, primarily created to address the youth. So our target segment, our target customer, right from the very first year, like we have just completed 10 years in the industry itself. It was a customer running from the 25 to 35 age group. And a customer in that range, 25 to 35 age group, is not gonna go to branch, is not gonna go to ATM to withdraw cash. These are the customers who are tech savvy, and they wanted a build which can help them through tech only. If I just share with you that some of our customers take money at 3 a.m. also. Some customers take money in seconds also. And depending on the profile of the customers, some customers do come up for the manual assessment or manual underwriting also. So if I just share with you that we have been, of course, improving year on year on that. Around 90% of our customers are approved digitally without any manual intervention. So that is the entire ecosystem which over the years, of course, many thanks to RBI for that, for creating that stack around it. Aadhaar has become so much powerful in terms of, KYC validation. DigiLocker has become such a important tool to fetch the, KYC data of the customer. And if you put one thing on another and build it as a stack, that actually helps deliver you the kind of result which you really want to achieve from the digital lending perspective. So I just share with you how we have been trying to find our space in all this ecosystem, how we have been trying to, hook our customer, because that is the age, when 25 to 35 years, generally banks are not that keen to give you a line, right? Generally banks don't give that kind of exposure to a customer. So we start that credit journey or that lending journey with the customer, and of course expect the customer to do cross-sell with us. So if I just share with you that around 70 to 75% of our customers are the repeat customers. We don't call any customer, we don't nudge any customer. Our customer has our app, they come on our app, they take a loan, they go away. As and when they need a money, they come back and take the money. So these are the customers who we believe that they don't want to be called, they don't want to be approached, they don't want that they are being asked to speak to somebody. They like their privacy, they like their time, they just want an app which is convenient, of course, which is transparent, an organization which is accountable, which is to that extent cares about the customer, and the organization which gives them an easy, simple way of giving a loan. Of course, these customers at this point in time are not, I would say, rate sensitive, because these customers have just started their career. They are just looking for an easy money for some expenses. Some of the customers do take money for, travel, like travel as one of the checkout financing, buy now, pay later, that also we do has come up as another segment which we are now looking forward to, to some extent compete with certain banks around it. Because travel is the sector which is the better quality customer. Somebody who is traveling to USA, nowadays it is difficult to travel USA, but somebody who is traveling to, say, suppose Europe, you can picturize what kind of customer would that be. And if somebody is traveling to Europe with a family, like you can understand or you can to some extent assess the income or the earning capability or the affluence of that customer. So that's how this entire ecosystem of FinTech comes into play. Now, how we do that, I just touch upon on the certain aspects from a lending perspective, how we leverage the technology, how we leverage the entire ecosystem from the KYC standpoint. So first of all, let me just explain to you how we cover the lending piece to a customer. Of course, as I saw in that slide, thin customers, they are the thin and NTC also, I would say, new to credit, who have never been funded by any organization till now, any banks or NBFCs. So these are the customers, if you guys would have reference to the credit bureaus also are depleting. Of course, I would say in the last 12 months, the credit ecosystem has been good. Banks have been performing better NPA performances. So that confidence to some extent is coming back. But 2 years back, maybe 18 or 24 months back, the entire ecosystem or the entire lending distribution of the NTC customers and thin customers has actually gone down, given the NPS problem which the industry had. So this is a segment, how you will lend those customers who don't have any bureau footprints. How will you lend those customers who don't have a bank statement which can give you that kind of confidence to lend some money to the customer? So here in this scenario, some alternate data comes up. Like if somebody comes up as an NTC or new to credit, or somebody comes up as a thin customer, but he is having a home in some posh area. Like we are in Pune, if you guys are aware of Koregaon Park, right? That is one of the posh area. If somebody is NTC who is starting his career and coming from that area as an owned property, so you can picturize that customer, like how to what extent we can leverage that information as an additional alternate data. There are many more aspects of the alternate data. Like very easy example is that somebody is holding a mobile number for last 20 plus years. That gives you a confidence about the stability of a customer, right? Somebody is holding an email ID which has been linked to that mobile number for last 15 plus years. So these are the cohorts, small cohorts. If you join them with somebody residing at some place, so all on those basis, what I'm trying to make a statement here is that we use all this alternate data information, we use the bureau information, and we create certain variables around it. So how these variables work? These variables help us build a scorecard where we give a ranking, risk ranking to the customer basis that scorecard. So if I just share a number with you, around 3,000 variables we have created for one single individual. So from 3,000 different ways we can look one single individual. So that's how the data comes up. That's how the data takes away the biasness. The scorecard take away the biasness from the data itself, which gives you some kind of confidence that you can lend to a customer and the money has to come back, right? We are in a lending business. We are in a business of collections. If the money is not coming back, then there is no point lending or running the business, right? So that is the firm belief which we also as an organization, we also chase the bottom line of the P&L. So that's the one aspect. Now with these scorecards, we have a tremendous amount of data coming up from the customer space, right? Bureau nowadays have become quite tech savvy. We have multiple information which comes to us as a proactive, as a leading indicators to assess the customer from that perspective. So bureaus are quite helpful, and then we can consume the bureau data with the bank statement analysis, like account aggregator. That has been a very much helping hand in terms of lend to the customer or lend to an NTC customer or a thin customer on the basis of bank statement. It takes away the fraud 100% completely, right? So now an account aggregator not only helps you give a lending to the customer, it helps you to give a perspective to assess your portfolio also, right? With that, of course, OTP driven permissions taken from the customer itself. So you can assess, like the customer whom I had lent 1 year back, are they actually receiving their salary on time now, or they have just started getting their salary received in a delayed perspective, right? So all those data, we keep on looking into data, we keep on improving our systems, we keep on improving our scorecards. So every year we look into it, we improve, and we use that information, that technology to So we use that technology to cover that aspect from our side. The fraud is another angle which comes up through the KYC validation. So for the KYC, like as we say that DigiLocker has come up as a very important tool where we can fetch the KYC of the customer. We use that KYC for the validations and the OTP driven environment, safe environment where we assess and validate the customer and then accordingly we disburse. So as I have shared with you, around 90% of our customers are approved digitally and around 55 to 60% of our customers are approved for the disbursement basis the KYC through DigiLocker. So that's how the entire ecosystem works. We keep on improving the numbers, we keep on increasing the numbers, but with lesser or reduced manpower. So that's the power of technology, which really comes to the fore, which really comes to help us. So that's it from my side. If any questions you may have, I'll be pleased to answer them. Okay, thank you.
So lastly, we'll have Ruchi ma'am doing great work with Vimo Seva, providing insurance via technology for the informal sector.
Good morning, everyone, and thank you to my peers here, and particularly would like to express my gratitude to the Gokhale Institute and the eminent dignitaries who have been behind the scenes in organizing this very insightful seminar. I'll give a brief introduction of myself. I'm a management professional of 31 years from IRMA, Institute of Rural Management, Anand. I have had different stints in my career across different international, global and Indian organizations, from finance to being an international trade advisor for foreign high commissions for over a decade, to working at IIM Ahmedabad and setting up the first India Gold Policy Center and scaling it, to Piramal Foundation, working in the water vertical, leading government engagements, program and policy, and currently as CEO of National Insurance, Vimo Seva Cooperative Limited, which is the pioneering multi-state national microinsurance cooperative in the country. It is the only of its kind globally as well. So, Vimo Seva was promoted by late Srimati Ilaben Bhatt, who was the founder of Self-Employed Women's Association. She set up several institutions under the Seva banner, primarily to meet the needs of the informal sector. And we have more than 90% of our economy and people, both rural and urban included, in the informal segment. These are some of the milestones of Vimo Seva. It started as an insurance program in Seva Bank back in 1992, while Seva was set up in 1972. And over the last 33 years, Vimo Seva has issued 1 million policies. It has 4,588 shareholders in 5 states, has settled claims over 290 million, and has over 100,000 members. I would like to focus a little bit on the Vimo Seva's theory of change. It is important to understand that the services offered are primarily again focused on the last mile and the communities at the grassroots. We offer financial protection through our insurance services, financial literacy, very, very important. If the grassroots don't understand what is risk and what should they do to mitigate risk, they would never pay up premiums for insurance. So we invest a lot in financial literacy. And then last but not the least, we are very, very conscious of generating livelihood. And I'm proud to mention that more than 1,000 of our insurance promoters or the sales force, the frontline insurance promoters, are all women from the grassroots. So they earn their livelihoods by engaging with Vimo Seva. Now this is the risk management model, because thematic was on risk management. So Vimo Seva, through its operations, affordable products, data management and technology, business channels and business operations, has a unique, very different kind of model for risk management. So I'll go into the details. Vimo Seva has, though been rooted in traditional Gandhian values, but has been very progressive as far as offering its services and adopting digital technology. All our products are now kind of being sold using digital technology. Our premiums are collected through QR codes that we have, and there are different reasons why Vimo Seva has been managing risk very effectively since its registration in 2009 with the Ministry of Agriculture, subsequently now with the Ministry of Cooperation. For the last 15 years, we have been sustainable owing to a multitude of various aspects and elements of business and risk management. The business model of Vimo Seva is as a mutual and an intermediary. As a mutual, we curate our own products where we retain the risk ourselves, and the pool of premiums is collected and retained as the risk pool. And as an intermediary, we partner with other insurance companies, which is the model that has been existing for many years. Certain things are very important when we talk of insurance business. Very important that the TAT, or the turnaround time for payment of claims, is less, because the members thrive on trust, and they actually continue to remain with us for years together because of the fast turnaround time and the high payout ratio, which is over 90%. Also, these are the business channels of Vimo Seva. We have a retail business channel as well as a B2B business channel. In B2B, we partner with civil society organizations across the country and offer different products. I'll be coming to that briefly later. But we have a loan link product which covers the risk of death of the loanee during the tenure of the payment, which is given by the institution. So we have several partners who are microfinance institutions or lending institutions. On the retail side, earlier I mentioned that we have over 1,000 frontline insurance promoters from the grassroots. So our retail channel, we have a bottom-up approach. The sales and marketing is done by the women from the grassroots, who we call as Agyavans. And then there are supervisors and the rest of the teams. The Agyavans are the people who are the front face of the organization and reach out to the communities for ensuring business enrollment, policy enrollment, claim settlement, so on and so forth. Talking of digital adaptation, which is the theme of the risk management here, Vimo Seva has been accelerating its digitization over the last few years. We have an IVRS system to ensure that our customers can reach out to us 24/7 at all times. It's a multilingual platform. Then Vimo Seva has a portal which is registered with TRI for bulk SMS services to our members, be it for their renewal of policies or about intimating about claim settlement and claim under process and so on and so forth. I'm happy to say that even though we are a micro insurance enterprise where all our customers are primarily from the low income group, more than 85% of our premiums are collected digitally, and 100%, almost 100% of the claims are going directly into the bank accounts of our customers. We have our own mobile application which serves as a CRM system, And this enables the entire operations team to enroll the members that take our products. Then we are active on digital social media, as you are aware. These are some of the digital steps taken. I'll skip some of that, but mention one or two data points. We have a high persistency ratio of over 85%, which means more than 85% of our customers we have been able to retain over the last many years. And I heard one of my colleagues here mentioning that if you have your customers for 15 years, it's a great thing. We have customers who have been with us for 20, 30 years. So that's the kind of loyalty we have. Claim payout ratio is also above 90%. These are some of the reasons why Vimo Seva's customers continue to engage with us. Just briefly, for the larger interest, the insurance sector in India is highly under-penetrated. Only 4% of the population in India has insurance. So you can imagine the unmet demand and the size of population who does not know what is risk, what are the types of risk, why they should even think of risk mitigation. So this is the state of affairs as far as the industry is concerned, and we are talking of more than 90% of the workforce in the informal sector. Now these are some pictures which speak 1,000 words on risk management in a micro insurance enterprise, understanding risk perception. You can see the pictures, I will not explain them. We offer products across life, health, loss of livelihood, financial, climate or parametric. We are the first insurance enterprise in India to offer parametric insurance recently. It was the first pilot for excessive heat insurance and climate insurance. Again, I'll skip this but go to the pictures, which are self-explanatory on how risk avoidance, risk reduction, risk prevention and risk transfer is done. So these are some of the highlights of the presentation. I will just take 1 minute more and so we have a range of products for wage loss linked to hospitalization, several products for hospicare, parametric I mentioned, accidental death, life and savings, so a whole lot of other products which I am not going into. These are some of the pictures from the field which are self-explanatory on how we engage the community members, and the importance of financial literacy and using social behavior communication tools at the grassroots is very important to make the communities aware. We engage children and women largely for our sales and marketing, and I would like to conclude with Ela Ben's quote here. Thank you so much. If you have any questions, I'll be happy to answer. Thank you.
So thank you everyone. On behalf of the panel, Pravasji, we have been just under 5 minutes extra. I see that our well-wishers Daljit sir, Jagdish sir and Amit is also here. So maybe there is no time for Q&A. If you want to take up the next session. Thank you.
Thank you, speakers. That was a really insightful session. We would now be proceeding to the next panel discussion. Can cooperative banks compete with commercial banks and fintechs? I would now like to invite to stage the panel moderator, Dr. Ravi Mishra, who is the RBI Chair Professor at the Gokhale Institute. He is also the former Executive Director, Supervision and Supertech at RBI. We have with us Mr. Daljit Dogra, MD and CEO of the Zoroastrian Cooperative Bank Limited, and Ms.
इनका PowerPoint भेजते हैं लगा
MD and CEO of the Zoroastrian Cooperative Bank Limited, and Mr. Amit Ghaisas, Director of the Janata Sahakari Bank Limited. Sir, would you take over?
Namaskar. So as you would have observed, little change here. We wanted the 4 top CEOs of the urban cooperative banks to be here, sharing their views. But due to some problem, board meeting, and they could not. So I will be the again crisis manager to indicate 5-10 minutes what are the supervisory and regulatory expectations from the RBI side, and then we will like to hear from. So he's CEO of Zoroastrian Urban Cooperative Bank, and from Janta Sahakari Bank, our CEO is there, but our director from their bank, he's as intellectual, he had also represented India in Davos and all. So when he gave this information, I requested him, thank you very much, he has also come. So we will do it like that. So I will give some perspectives. So there will lie the supervisory regulatory expectations. So each of you will give your perspectives for 15 minutes to do like that. We will question answer type will not do, because 3 other CEOs had they been, then it would have been better. Okay. So our topic here is whether cooperative banks can compete scheduled commercial banks and FinTechs. FinTechs far ahead. So so the question itself to urban cooperative bank officers sounds as if no, but I will give you the good news. So from the database of Reserve Bank, it sounds plausible if you all work hard. Okay. So now some points I'm telling what is the issue. So if I give some quick data, your urban cooperative banks or cooperative sector is not far behind in terms of financial results. Even in NPA, which was a big surprise to me, the fall in NPA, pace of fall in NPA levels is 10.6% in cooperative sector. It is 42%, in commercial banks, 42% in cooperative banks. So that means the effort to reduce contaminated asset, you are nowhere less than the normal commercial banks. So this gave me a surprise also. It's good. So it's kind of well done. And deposits, loans, advances, given your portfolio of liability and asset side. So I don't think it is anywhere less. Like deposits rate of growth in scheduled commercial banks over 10%, in cooperative sector around 7%. So it is expected, because given the territorial jurisdiction you have to work on, so obviously this much is expected. Then deposits, banks rate of growth of deposits over 10%, cooperative sector is over 5%. Okay. So here again, if you assume the 70% of India is agricultural, village oriented, so deposits should have come to cooperatives. It is not that way, because in commercial bank sector also, rural branches are there, regional rural bank is there, small financial banks are there. It is not they are competing with state bank. So they have to also compete very fiercely in rural areas, in the rural Indian hinterlands, with this kind of banks of their comparable size. Let us forget Saraswat, Cosmos, few others. All others are as good as RRBs. So that's why we would have loved to hear from these 2 banks who are trying to get bank license, to know what is their view. So I was hopeful they will say we can compete, because they have become reached a commercial bank. But you will give a better results, realistic objective. So now let me come to what you don't know, but as a supervisor, I have some sense. What are the unique strengths of cooperative sector? Because I was directly in charge of urban cooperative banks, and I was always in favor of helping them. Marathi sahab hote to bolte. I am very hopeful in India. So let me start with this line. We cannot improve the quality of life and ease of life in rural area without improving or enhancing the quality of functioning of cooperative banks. So this is a very serious statement I'm making, but I stand by it with authority. It can be done. But why? What are the unique strengths? You may be knowing, I'm just telling what in RBI we think you are. Okay? So that will, first one, community trust and local relationships. Because I have seen, starting from MLAs to MPs, so they hate these banks, bad, good is a different issue. At least they are acutely concerned about the health and the activities, what they should be permitted in the cooperative sector. At least 3-4 states, Bangalore, Maharashtra, hugely led by Mr. Satish Marathe. There are potentials, and rural people will love to deal with cooperative banks than others for obvious reasons. And second is financial inclusion. When the current thrust in financial inclusion, so who can be the best candidate to carry it out in the eyes of the government and Reserve Bank of India? And adding to this fact, if we see the cooperative sector is fathered by our Jan Pratinidhis, so then it should be smoother. And accordingly, definitions have been changed, priority sector emphasis has been given. So there are a lot of unhappiness from cooperative sector. They wanted, they should be given areas which banks are doing. Let us not think like that. The area where you can work better, that is where you should work better. And financial inclusion, giving loans to agriculture, SMEs in a village setup is the best place for you to work with. And if we see startups now, as we saw the last presentation, this was not there when we were thinking of policies on cooperative banking in Reserve Bank. Now things have changed. As I see, I have seen our, he's there. So they have already a software how to do credit appraisal fast. At least one presentation I have seen myself. Okay, so it is not that the FinTech industry, especially the financial product service providers, are not vying for commercial banks and bigger banks. They have their own strengths to do it. They will recruit, get it done themselves. They can hire the big four to get it themselves. You cannot. So that was a major concern at RBI. Then how will you do? You need technology, you need investment, but you don't have. But I am very glad. At least last presentation, 4 of them were there. You could have also become happy. So they have also started thinking of how to streamline your systems and procedures so that you work efficiently and give a better per capita productivity, even without recruiting them. Because you cannot recruit those kind of professionals. They will not take more than 50 lakhs per year. But there is a ray of hope there. So I am very happy about that. In financial inclusion, with the complementary relationship with some of the FinTech industries, which are now very acutely looking at the procedures of cooperative sector and trying to find solutions. So the solution here, RBI or anybody has nothing to do with this. So you have to look around, they're there. Get them with you and get your things streamlined. Then social and developmental orientation. No, I don't have to elaborate. So this is obvious by the very definition. Correct? Then what are the major challenges? So these are both by RBI or any commonsensically. First is technological limitations, which is very clear. And why it cannot be adhered to so strictly, because number one, your asset and liability side, the portfolio is so less. So getting investment in technology to accelerate that pace, so may not be cost benefit wise okay. But always cost doesn't matter. Efficiency also is required. Your standing in the sector as capable, technologically also matters. Correct? Yes or no? You should say yes. I am speaking in your favor, all our delegates. So that is one. But that is getting filled by our colleagues, as I see. Then limited capital and scale. Nothing to lament about this. That is the way it was conceived. It was never conceived, cooperative sector. You will go for IPOs, you will go for forex inflows. No. So there is no point in thinking of things which you are not supposed to have been do. You have to create an atmosphere in a local manner, organize capital yourselves. Borrowings, I say, I can think. But borrowings will flow, their double-edged flows. As you say, your performance also decides the pace of support from outside. If you are efficient, more people will come to support. If you are not, there is a vicious cycle. Of course, paradox is when you are not, people should come. But that doesn't happen in life. Life is not yes or no. Life is somewhere in between. My punchline sentence. Okay? So that we should not creep about. Maybe after 10 years. Then next, governance and management issues. This is well documented. I will not deliberately elaborate on this. Then I will step onto wrong things. But at the same time, in the last change in Act, our Joint Secretary also is sitting here. So with their help, a lot of changes have been made in corporate. How it has got manifested in your boards, I do not know. And the way our Kashyap Sahab has given your profile, so I am optimistic. If this is the kind of board members are there in the boards of cooperative, so I have no other sense than to be optimistic. Others board now I have no access. But the way he told, I was first getting surprised. Because I have only heard about it. I have taught directors many times. But 90% of their Jan Pratinidhi type, or businessmen, or agriculturists. But I had never seen an academician. Intellectual people are also joined cooperative boards. So Tripathi Sahab, for your your attention. So here is a board member in a urban cooperative. He is an intellectual by himself. He nominated India in Davos. So I never expected this kind of people after our amendment will join the boards. It is a signing thing here. Then financial fragility and scandals. So naturally I will sound like a supervisor. So that is how we are sound, because we deal with that. How fragile you are or not, and whether you are prone to scandals and scams. You are prone with more technology. The best target of negative technology advance will be cooperative banks only, like RRBs, uneducated population. So that will be a huge challenge for you in cyber threats. Then why they are fragile? I will skip political influence. I will skip governance failures for obvious reasons, you know. High penalties again. It is official stance. I have taken from some CEOs or someone has taken. High penalties is not exogenous factor. Penalties are endogenous variables. You have only invited yourself. So to the best of my information, RBI had this power, but it was not being used. So now that it has been operationalized, so you have to get so it's a part of life. You commit a mistake, you will get a penalty. So this, no excuse on that. But liquidity crisis. I have all sympathy for cooperative sector for this liquidity issue. As we know, for a bank to run healthily, two kinds of crises are come. One is illiquidity, and the extreme eventuality, if they cannot solve the problem of illiquidity, then insolvency will come. But if you are able to solve the issue of illiquidity, then insolvency strategy is very difficult to come, unless there is a scandal, scam, fraud. So liquidity management is a big issue. But I have seen the quality of investment and the managers. 2, 3 I have seen, one of them also Janata Sagar. He keeps on coming. I have tested his knowledge. So I am again optimistic. So I hope if they are doing, all others must be doing. like those who are dealing with your investment, are highly qualified and intelligent people. Then only they can earn money. Then they can manage the maturity mismatch. That is where real knowledge is required. Okay? So with this, I will stop here. I would also be interested to hear from you. What is your view about this? So, आप क्या नहीं आप आइए CEO आप हैं आप direct CEO. So we will not hear from the horse's mouth. He is CEO of Zoroastrian Bank. What he feels, whether his bank can compete at least with bigger cooperative banks or smaller commercial banks. So I am not expecting we will compete with State Bank of India or HDFC. If
I think, sir, we were forgetting out the cooperation values. Cooperation values, principles. There is no cooperation among cooperative. There is no competition among cooperative. So I think in your statement, I think.
okay. That way, okay. That way. So I thought about that. Okay. You got it? The word competition doesn't arise in cooperation. So you please take care of telling that. But I thought maybe you will aim fast at bigger banks. Okay, with this, so let us welcome our CEO, Zoroastrian Urban Cooperative Bank from Mumbai, to give his views. Please.
Good morning, everyone. Thank you, sir, for giving this opportunity. So the topic is whether urban cooperative banks can compete with our peers in commercial sector and the fintechs. So I'll share general assessment what we have in Zoroastrian Cooperative Bank, and also my experience when I was in commercial bank. I was in Central Bank of India, and then I was in Axis Bank, private sector bank, government bank, and now cooperative bank. So there are more than 1,400 cooperative banks in the country. We have Ministry of Cooperation specially now made for the cooperative sector. Lot of cooperative banks are doing great. We have large cooperative bank like Sarsod Bank, Cosmos, Shamrao Vittal, TJSV, 5-6 banks which are in tier 4. Then we have been surviving for more than 100 years. All those factors reinforce that urban cooperative banks or cooperative banks in general will survive, will grow. There is no doubt about that. Now, all is the matter of history that if you have been there for 100 years, most of the commercial banks are also for that period or maybe longer. So there is no challenge as far as our existence is concerned. But with the changing times, we also have to change. So I would share some of our thoughts in Zoroastrian Bank, what we think is right to continue this sustenance. Globally also, we feel that cooperative banks or cooperative movement is unique to India. In fact, there are countries in Europe, France, Canada, even US, where the cooperative banking or I would say financial sector entities, whether they are credit unions or cooperative banks, they are much larger and they are more regulated than what we think we are. We have now 2 regulators. We always say that we have 2 regulators, but there are 3 regulators there. So one parallel is that umbrella organization has come up in India. All those developments point to one fact that we are very relevant for the economy of the country. We have unique strengths. You all know, I hope a lot of cooperative banks, bankers are sitting here. What we understand, the local, we are community-based, geographic-based, or whatever sector-based banks. Most of our staff are local. We understand the local customs, the local people, the traditions. And as we all know, banking is a profession of relationship and trust. Money also comes with that only. So how we build a relationship if we are in touch with people. So since we are local people, we will understand the local customs, traditions, geographies, needs, and the people background, their creditworthiness. Without reading any civil report, we know the people. So we have better understanding of that. And if you are in touch with the people, relationship is built. And if we do what we say, then the trust is also built. There are many success stories where people share that this small cooperative bank gave me small limit. I hope in Bombay we know Prashant Corner. Many times we read about them, they are very big now, but they say small limits started from TGSB. Probably that point in time, large bank would not have looked at such a small startup. Startup is a new word, but actually there has been startup all the while. We can assess the requirement of the person much better than a large commercial bank. Nothing against them, but because they do not have that wherewithal. Cooperative bank, we can customize a product. If somebody needs small finance, then we don't have to have very structured product, design that, get it approved. We can very quickly respond to the need of the local person who needs some financial assistance. Whether it is small dairy, it is small sweet shop, it is small service center, whatever is the requirement, I think we are very, very well suited to meet the local requirements and understand them and develop a product right away. If that is the case, then it should have been very easy for us. But it is actually, we all are now experiencing, there is a lot of stress, lot of drain on our resources. One is that the competition is heating up. Large banks are also there, they are present physically in every nook and corner of the country. They have also started understanding the local requirements as well as we do. Then there is a technology which has added lot of scale and reach. People don't have to come to the banks. Then their talent quality and the pockets of those organizations, commercial banks or even FinTech, they are very deep. They can pay huge price for the talent. They have deep pockets. They can wait for profits to come for 4 years, 5 years. We are seeing that new FinTechs like Paytms, Zomatos, most of them incur losses for a long time, but they still survive because there are people who can put money in them. Our capital raising is a challenge because whether somebody has a crore of rupee in share capital or 1/3 rupees, the rights of the shareholders are same. So investors don't find us very attractive investment destinations. Then the compliance cost, we often discuss informally, where we feel that we are required to be as compliant as the State Bank of India. So if it is, whether it is early warning signal, whether it is fraud risk management, whether it is risk management, whether it is online audit, risk-based audit, that cost is same. And because our size is small, our pockets are small, so we are not in a position to afford those costs. But the regulatory requirement is there. If I have to have internet, then I have to have a very safe internet banking facilities to be offered. Because I'm part of financial system, and if my door is open, entire financial system can be threatened. So a regulator in its own place is very right, but then my challenge is that I can't afford that cost. There is a way to deal with that also, but let me just highlight some of the areas where we are feeling, I would say, threatened and under stress. The talent acquisition and talent retention, both are challenged because the salary which private sector banks or commercial banks can pay, the safety which they can pay, probably we are not in that position as yet. And sometimes when we recruit new people, offer them good salaries, after 3-4 years, they are picked up by the competition and nobody can stop it. So if we say that they should not be allowed to do that, it is not going to happen. We are a free country, people will make their choices. Average age of employees in the cooperative banks, I think in our bank it is 45 and 46, 47. Most of our recruitments in the past would have not been done as professionally as the people these days these banks are doing. So talent quality, talent retention, training is another area which we are facing a lot of difficulties. Then the pricing as well. We keep reading the publicities of bank that home loan 7.35, 7.10. Our exposure limits are small, so larger customers, we can't reach out to them. They are not interested in small ticket loans from one more bank like us. Having said all that, there are ways and means to handle these challenges. So first let me share our experience about the technology. Now, regulator wants that we should have a very robust CBS. We should have CBS and it should be very robust. It should not be a weak one. And that is a very right, I would say, advice. That CBS is the foundation of entire IT infrastructure around which it works, around which the surrounding systems will work. So unless we have a very strong CBS, we won't be able to scale it up. Now, we have chosen SaaS model, software as a service model, and it is working well. Because large bank can afford direct IT, but we cannot afford. So software as a service model is one where you pay as you use it. Even there also the costs are high, but they are affordable. Customer today, we have very famous example which we see day in, day out. Few years back, we didn't have the large shopping complexes or the malls, what we call them. So the next door shopkeeper, we were going to him and getting our things. But today, most of us are going to malls because they offer large variety, wide choices, good experience. So we not dislike our next door neighbor, that shopkeeper, but we go for that experience. So we also have to offer all that what these banks are offering. So I would say for the technology part, one is that SaaS model, wherever we can go. Second is that if we can join hands, because the economy of scales, we have better bargaining power. Umbrella organization is expected to help us out. If we choose that path, then again it will give us that advantage. In case of talent and talent retention, I think we have to scale up our businesses first. If you look at cost income ratios, in our bank is quite high, and I think in urban cooperative banks also, it must be 60 plus. Whereas the private sector banks or commercial bank, they have it less than 50%. 45 to 50 is the ideal. But our cost income ratios are very high. So as long as we don't scale up our businesses, probably it is very difficult to have good quality talent for the long run. New products, I think we have to ask sometimes this question we keep asking in Eurastal Bank: when was the last time that we devised a new product, whether it's a loan or deposit? And if we are doing it at least 2-3 products in 6 months to 1 year time also, probably we are keeping pace. Another point is the average age of staff is 45, and probably average age of our customers also would be higher. So young generations, how we catch up, and tech savvy banks only will be able to do that, because these days this Gen Z, whatever we call these youngsters, they don't want to come physically to the bank. They want everything, like they order the food on the Zomato, they want everything to be done. So if our apps are also as versatile as those, then we can compete, we can survive, and we can grow. Let me tell one thing, that because we are regulated very strongly by Reserve Bank of India and our own registrars, I think the trust factor would be much better in the eyes of the customers than other companies who are not that strongly regulated. So I would say the strong regulation, in fact, is a guarantee for our success, for people to trust us more. There is a very common example. Suppose we go to the market and we want to buy something. If there is some Tata product, we are assured. It may not be a good product, but we are generally, psychologically, we are assured that it must be good. I think that kind of trust is there with the regulated entities like us. I have a brief presentation. I have time up to 45. हाँ जी? हाँ जी? Okay, time? Okay, okay. So, this is a slide of wish list of a CEO. I'll take 2 minutes. Wish list of a CEO, because how the urban cooperative banks are running, board of management, board of directors, they are setting the direction. MD and CEO and top management along with the staff has to execute that. So wish list of, if you can run it fast, sir, I have to use it from here. So leadership and direction is taken care by board and the top team. I hope that with lot of improvements in the governance which have been infused by regulator, a lot of things will be happening. 51% of directors should be professionally qualified. Whether we like it or not, it is here to stay. People, as I said, people, the people is the real. We may have the best of the fighter planes, but ultimately the pilot has to be outstanding. Otherwise, machine is not that good. Technology, I said, it should be not only fast, it should be safe and reliable, and we should have same experience across all channels. Whether I'm using it on laptop or on my mobile or on ATM, it has to have the same experience. Like when we go for Pepsi, it is same taste. Banking has to be ethical. We can build our reputation over 100 years, we can lose in 1 minute. So whether customer knows or not, if he knows we have done something wrong, I think we should set it right. It is costly, it is sometimes painful, but we must endure that pain. So without ethics, perpetuity of life of any organization is not assured. We have seen organizations coming down because they are not complying well. Business has to be profitable. Top line is not of use if the bottom line is not there. So it is, we can't land at 7% because my cost is at 6%, overhead maybe 2%. So it's better not to have that top line, unless I'm able to defend my bottom line. Social responsibility, something we should give back to the society. It is not applicable to us, but in our case, we are earmarking 1% of our profit for social responsibility. Small amount, but the intention should be there. I think that, thank you very much. I hope I have added some value.
I'll do that. Good morning, everyone. It's usually a very difficult task to be the last speaker. Most of the points are already been covered. So I'll try to take it up from a different perspective. Luckily for me, I'm not a banker per se. I'm not the CEO of any bank. So I'll take the perspective of the board instead of the bank executives per se. Mr. Dogra just said that the 51% mandate for professional directors is here to stay. Luckily, that's what made me a director here today. So I'm happy that it's here to stay. All the points that have been discussed till now, specifically by Mr. Dogra, are absolutely bang on. But I'll just try to give it a different perspective to a small extent. One of the most important issues that he spoke of was that banking is in the business of trust. And I would say the corollary is that banking is in a business of risk. So when we as a board or as a board of management that every corporate bank has, the role is to ensure that we do a trustworthy but calculated risk business. I specifically said calculated risk because we can't have a risk-free business in the business that we are. But that's where the strength of the board comes in to evaluate the business that we are trying to take on board and then try to check whether we can actually have it to an extent where we can minimize the risk or at least have some sort of risk mitigation in place whereby it doesn't affect our overall strength. When I'm saying overall strength is because we may have, most of the cooperative banks may have strength enough to absorb certain losses. But then the regulatory framework itself ensures that we don't just base our strengths on our ability to absorb losses, but to ensure that we avoid losses. And which is where the safety, the security of the deposits that we have with us is covered. So as a board of a bank, our primary role comes up in ensuring that we have a risk-free, a calculated risk-based, trustworthy business that we work in. he has been very point blank again on saying that cooperative banks are specifically more suited to take up local or community based or geographical businesses, because they're in that geography, they're in that business, they're in that community. But I'll also say that nowadays that's not just enough. We have to work across communities or across geographies. For a bank like us, I mean, Janata Bank also is a tier 4 bank. So for a bank like us, we do have to expect business from all across the regions that we operate in. And when we are doing that, we can't just rely on our knowledge of a certain community or certain geography. As Sir said, we are also competing with even smaller localized banks which have that as a strength, or rather that as the only strength. So we have to compete with that as well. In that scenario, the only advantage that cooperatives can have over, I would say, commercial banks is that we are in a position to expedite our decision making. And that is because every local branch executive also has access to the CEO if the need be. Because of our size, because of our structure, because of the way we are organized, being a cooperative organization itself, this access across hierarchies is a lot easier, and it is also expected in many cases. So this makes the decision making faster, and this is where we have an edge over the smaller banks, because we have the larger cooperative banks have a larger pockets, larger exposure to various kind of products, and are having our own products in that way, and still we have the flexibility of faster decision making. So that is one. And when we are competing with the fintechs, actually this advantage gives us a bigger boost, because the fintechs, though they have very deep pockets, as you rightly said, they can sustain losses for years together, but they don't have an option but to have a very standardized product marketing and product execution process. The fintech works on formulas, on softwares which have a specific mandate, a specific structure, and based on that, all their decisions are taken very fast wherever it falls right within that stipulated framework, and then very difficult if it goes a little beyond that. He was right in saying that we can customize our products to suit the customer needs. So for us, for banks like Janata Bank or any corporate bank for that matter, our advantage is that we can have this flexibility against the much stronger technical expertise of the fintechs. Coming to the technical expertise itself, the CBS part that he spoke of is, yes, something which is mandated by the regulator also. At the same time, that is what is giving us a very strong foundation to work ourselves better. So basically, like for example, we are also working with TCS for our CBS now. So we are also getting into a much stronger, much stabler CBS system, and larger corporate banks are certainly moving in that direction. The SaaS model, of course, works equally well for smaller banks. So getting a strong CBS now is not something which is unheard of in corporate banks. Rather, being mandated, people are actually understanding the importance of it and getting those CBS working in their own units. We are also having, in Janata Bank, we are having Makran's software also. I believe the trials are going pretty well. So the banks are going forward with trying to use different softwares, different platforms to help us take decisions. Faster is our strength, but more studied, more analyzed from different angles, and we get it right the first time. So we are doing that as well. The other part is that this gentleman said is, in cooperative banks, cooperation is the main theme. So, oh, okay. So, a very valid point. Cooperative banks themselves are cooperating within each other, and now we have a very good option of, or rather we are doing it ourselves also, we are cooperating with some fintechs also. So they have their strengths, we have our strengths. Wherever we can synergize those, we get a much better deal. So cooperation between fintechs and banks is also happening in many places, and that is also a way for the banking sector on a whole to go forward. Along with this, I'll just put across a few challenges that cooperative banks have today. Most were covered by Mr. Dogra, but I will say that the capital raising limits also is something that sometimes affects our growth rates. The strong regulation that banks have, cooperative banks have against fintechs for that matter, is also something which can sometimes act as hindrance. I do agree that the strong regulatory framework has helped us be where we are today, specifically from the bottom line perspective. So we are ensured that we don't go down. But then that also helps, causes a hurdle towards our growth and reaching out to the right kind of people. We also are in a position because of our structure, organizational structure, to not necessarily have our pay packages in line with the private banks, the commercial banks. We can compete with some of the localized banks even better. Sometimes the local banks pay better than us, but we can compete with them. We can compete with the smaller state banks, I mean the public sector banks as well, but some of the fintechs, some of the private banks certainly have much better remuneration packages, and that becomes a challenge, but that's, as he said, that's part of the business. The only thing that we can do to counter this is build up on our strength, which is the organizational structure again. So we, being a cooperative bank, we have a cooperative approach with the depositors, we have a cooperative approach with our customers also, and we have a cooperative approach with our staff as well. So it actually runs more like a unified family than three discrete groups. And when that happens, we can actually strengthen that kind of relationship that we have with very strong training for upskilling of our staff to take on the roles of more technically competent. When I'm saying technical competent, what I'm saying is not banking skill sets itself, the tech skill sets and the tech platforms. So being upskilled on the tech platforms helps our staff and our complete family to interact with each other with a more robust guarantee of success. And that's exactly where today cooperative banks, specifically I'll obviously talk about Janata Bank, but I am pretty sure a lot of cooperative banks are working in that direction so that we have a more robust, technically sound staff using the right tech platforms and still maintaining our unique cooperative culture to ensure that we are also working with the same philosophy. So I am pretty sure that from a CEO's perspective, from the banking staff perspective, there are many nitty-gritties of how to get this done. But at a board level, this is the direction, that is what we have been following, we have been pushing for. And at least at Janata Bank, as I said, we are all working in the same direction, not just because the board gives a direction and the executives follow, but because we all sit together and also come up with the right steps in that direction. So I am pretty sure that, as Mr. Rabi said, we have 100% confidence that we are going to be able to compete with all the competition that comes from various directions, because we'll be competing with them at certain levels and cooperating with them at certain levels, but ensuring that the sector in itself will keep on growing. Thank you.
I would now request Rabi sir to present the speakers with the mementos and Shravani to kindly assist. Thank you, speakers. That was a very informative session. We would now be proceeding to the next technical session, Governance, Leadership and Digital Compliance. I now invite the session moderator, N. Suganand, CGM Department of Supervision, RBI, Mr. P. Sunil Mohan Krishnan, General Manager, Cooperative Sector Development, NABARD, and Mr. Suhas Patwardhan, Chairman, Maharashtra State Cooperative Housing Societies and Apartment Federation. I request Mr. Sunil to take over.
Thank you very much. I would like to take this opportunity to thank Gokhale Institute to give NABARD this opportunity, and wouldn't take much time. I'll start off with my presentation. Can you play the presentation? Yeah, so I'm going to talk about the digital initiatives for cooperatives that NABARD has taken for the benefit of the cooperatives. Yeah, so these are the basically my presentation is going to cover these four aspects: the computerization of PACs and ARDBs, the cooperative governance index that NABARD has taken up, the Nivaran portal that NABARD has already deployed, and the Dehat that we plan to deploy. I'll talk about this in brief for your benefit. Regarding the computerization of PACs and ARDBs, as we are aware that the Ministry of Cooperation is a dedicated ministry now for cooperation, headed by the Honorable Minister Shri Amit Shah ji. And NABARD is the implementing agency for the computerization of PACs and ARDBs. 31 states UTs are being covered under this, with nearly 80,000 PACs and 1,800 plus ARDB units in 10 states UTs. The benefit of this computerization would be that the PACs and the ARDBs would have a complete ERP system with a suite of almost around 22 modules, covering right from membership to their loaning, their borrowing, their deposits, their governance, their non-credit activities like warehousing. In fact, elections can be conducted through this ERP system. It's a state-of-the-art ERP system, and it covers both the credit activities, even the audit. You may be aware that the PACs and ARDBs, their audit takes a very long time, whereas with this ERP system, with this software having role-based logins, including logins for auditors, the audit can be completed within a couple of days, and if it's a small PACs, within a day. Moving ahead, the other advantage of this ERP system is that it has integration with the higher tiers of the cooperative system, and also to other government portals, wherein the subsidy platforms and the agri-stack, it has the feature of integration to that. This will definitely improve the services to the members, bring in more transparency, efficiency, speed of business, and most important, last but not the least, it will also be, since it's computerized, the entire nation's cooperatives, the lowest tier is going to be computerized. It will provide us a valuable source of data to the various policy makers for doing the analytics. Now I'll come to the Cooperative Governance Index, CGI, what we call it in NABARD. So this is NABARD's initiative, and this will facilitate, it is yet to be launched, this will facilitate the cooperatives to view their governance index and work on improving on their weak areas, especially in their various banking processes, systems, and structures. Like I said, NABARD is working on the framework which will quantify and monitor the governance standards in the rural cooperative banks. And the banks will be ranked on 135 parameters on governance, on the participation, on transparency, on compliances. And these 135 parameters will be sourced from our supervision. We supervise the cooperative banks, our supervision software, which is called SuperSoft, as well as the return software where the RCBs submit their returns to NABARD, that is the Ensure platform. And the various banks will have the facility to assess their cooperative governance index from the portal and prepare an action plan and thereafter, review the progress in their board meetings as well as the high-level committee meetings. This will help them in improving their index, which is very important in the current scenario. Coming to the Nivaran is another initiative by NABARD specifically to address the complaints of the bank's consumers. So we have developed this portal and we have launched it in July of 2025. This is accessible by the various cooperative banks on bank's website. This is accessible to the customers of the various cooperative banks through the bank's website. Yeah, sorry for that interruption. So, this platform is going to be robust. In fact, it's already provided. It's going to be a robust grievance redressal for the customers of the RCBs, rural cooperative banks. It also supports integration with the bank's own CBS software, and it will help in easy monitoring, submission, processing, and resolution of the complaints. In future, we are also planning to integrate it to the RBI's integrated ombudsman scheme. So that will, bring a stronger picture to the entire grievance redressal mechanism. Moving on, sir, this is the last, won't take much of your time. This is the last, it has been talked about that the next revolution is Bharat and not the metros. So this is the Dehat, that is the seed to market that NABARD plans to launch. The heart is, as you know, it's a rural market. So we have named it as Dehat. We want to transform the PACs, which is the lowest tier of the cooperatives, into a multi-service value chain centers. And this will be a portal-based thing. Basically, it is to give you a concept of what this is. It will be input and output aggregation platform to bring all the national level all the packs at the national level on a single portal. It will also help in the cooperation among the cooperatives. So basically, the market is being brought to the packs on one single portal, something like your marketplace of Amazon, but this is specifically for the cooperatives. This is one initiative that we are taking, and it will also enable digital KYC. There will be transaction traceability and farmer profiling to enhance the transparency. It will also help in understanding the creditworthiness, and there will be also additional services like providing climate smart agronomic advisory and soil health services to the farmer members of the packs. And I've lost that. Yeah. And finally, we will be building the PAC's capacity for aggregation, grading, and direct market linkage through this Dehat network. So that was from me, from NABARD, NABARD's initiatives for digital transformation of the cooperatives. Thank you very much. Thank you, sir.
Good afternoon to our respected delegates. Here, basically, I appreciate the organizers for the wonderful theme and very thoughtfully put out various sessions covering various dimensions of how digitalization is going to, help in the new era of, this era. Again, it's not particularly focused on a sector. Today we see a huge set of transformation of technology, and with that, transformation of business models and how different sectors can enhance the processes, get more customers and connect with the customers, make themselves more efficient and all that. So in this context, we have seen, I was looking at the schedule, and yesterday there was interesting session on the core, the digital dimensions, the core dynamics of implementing the new technologies like the AI, the cloud, the APIs, and so on. Now, this is nicely culminated in this session, the organizers are given, in terms of the governance, leadership, and digital compliance. Now, implementing technology is a serious thing. I mean, there are certain discipline associated with that. And while technology brings in a lot of benefits, the other side of it needs to be taken cognizance of. And if that is not done, the technology implementation objectives wouldn't be robust. And here again, the session lead here is governance, leadership, and digital compliance. It's imperative generally from, if you look at RBI regulations, the important placed on the governance mechanisms and the leadership. Increasingly, the earlier days, gone are the days where technology is seen more of a technology issue. There's an IT department issue. Now technology has become a governance issue, where right from the board, senior management, everybody has to invest time and try to understand what is the level of changes that's happening, what are the potential business model changes that can arise due to technology, what kind of particular risk can emanate from that, and all that. Otherwise, if a technology implementation isn't well governed, there is the risk that the intended objectives will not be achieved. So we do see instances where the investment is there, but sometimes the way the technology is leveraged or implemented, it's weak. So the important, the underlying backbone for this is ensuring robust governance. So again, the key topics that have been focused on is on the digital governance framework. So when we leverage digitalization, technology, there has to be a framework around that. Because like I said, again, technology, when we talk, technology comes in layers. There's there's a front end, there's the middle layer, there's a back end where the data is storage, there is a network layer which connects customers to your back end systems. There are third parties where you need to connect to, for example, your UPI, your IMPS, your third parties, products again. For certain things you connect to RBI, there are other third parties you connect to. And so technology comes in layers. So there it's imperative that the governance mechanisms focuses and gives adequate control framework for robust implementation of technology across its layers. That's the important thing. Now, sometimes practically what we see is, there's a focus on one layer or the other, some other layer missed it. So, which means we call it differently as the defense in depth approach. And many of the you may be knowing, who are broadly aware, that the defense in depth approach is a critical thing. Now, what's another context of technology is that the moment you connect it through either your payment product to third parties, or you give your net banking or mobile banking, again, any person sitting in anywhere in the world would be in a position to access this asset. So that's another angle to implementation of technology. So earlier, without technology, things were localized. Now through technology, we are able to connect with the third parties. We are able to connect better with the customers. Customers are very happy that we're able to give more services and products and all that. But at the same time, we need to recognize this technology. Through these products and connectivity technologies, any person sitting in any threat actor sitting in any corner of the world could also access that. And if our technology implementation isn't robust enough, obviously they are going to try to do unauthorized transactions and all that. So it's imperative that again, we have talked of previous sessions about the scale of UCBs, different challenges, size, capital, and all that. So we need to see that whatever governance is commensurate with our digital profile. Now, not everybody can have an equal thing. Now, we need to understand here what is the potential risk. You know that in the RBI's regulations also, as the digital level of a UCB increases, as the complexity increases, the regulatory requirements in terms of IT governance and cybersecurity also are proportionally higher. Which means that because suppose you are connected to a payment system, and if there are weaknesses there, in today's real-time world, it's only it takes a matter of few minutes for the money to be taken out and to be enjoyed by the threat actor. So that is the context that while we don't expect the governance mechanisms to be equal in all entity, it would certainly important that it is proportionate to the digital profile of a UCB. So end of the day, ultimately UCB as a sector, it's a small, it has its value, great service to the local population. As also now with all the digitalization, you can expand from your local domain to the larger paradigm. So with all this, it is imperative that the corresponding cybersecurity controls and governance mechanisms are important. Just take a few more minutes on some of these aspects. Again, here comes, when we talk of the governance, a big emphasis is based on the board and senior management. So end of the day, ultimately, there has to be at the top level the right question, what you call tone at the top. Tone at the top ensures that the technology control, the control framework is robust across the entity. And across your first line of defense, which is your IT function, as well as your second line, the cyber security function, as also third line, the audit and assurance function. So again, this is another part of the digital framework, that it's not enough that you do a lot in the front end to launch internet banking, mobile banking, digital channels, but at the same time, there are other lines of defense, like your audit is not really getting an idea of what is being launched, or the kind of control mechanism that needs to be put in place. So it's important that a balanced understanding, awareness of the IT and cybersecurity is taken into account. And this is where RBI places key importance on the capacity building initiatives, where I think many of you are aware that we go to different regional offices, invite participants to the RBI regional offices. And you would have also heard the last time in the monetary policy statement about a massive mission suction capacity building program targeted at the board, senior management, assurance functionaries, technical functionaries, and other employees who handle credit, investments, and so on. So today, this important aspect of the technology is changing so fast, and we need to catch with those changes. We need to understand how these changes is going to impact my risk profile, my business model. So it's important that different functionaries, it's not just alone the board, obviously senior management, they give the overall oversight, they give the direction, but also different sets of functionaries have to appreciate and understand the value of leveraging the technology, the need for understanding the risk profile, how this new technology changes and all that. So capacity building, obviously important thing. And again, important aspect is having a regular framework. Now, the digital governance framework is one of the topic areas here. The important aspect is that from a board and senior management perspective, it is imperative that they get feedback from the lower units as to what is my overall cyber risk profile of the entity. As I said, cyber risk is, can impact the safety and soundness of an entity. Now, today we all appreciate without technology, there is no business model. It's not those technology strategic enabler, those days are gone. Today, without technology, there's no business at all. So that is the case. So with that being the fundamental thing, it is imperative that technology is not treated as an IT issue, but rather across the board from board and senior management, the inputs are taken. Now, another consideration is on the dashboards. Like I said, periodically there needs to be inputs on what are the potential vulnerabilities, and are there end of life, end of support issues. What about the project management, IT on cyber security? How do they go well? What kind of metrics are there? Previous quarter, how was the high risk vulnerabilities? How have they, trended in the off late? And have there been any changes there? And these kind of critical aspects. Again, we are not saying that you give equal focus to all systems, all processes. The critical ones, like that vulnerability management, patch management, those are critical things. If controls are weak on that, obviously threat actors are going to do unauthorized transactions. So again, when you talk of cyber security, we're talking in terms of confidentiality, integrity, availability. Because without technology, there's no business model. If the technology is weak, it's going to lead to big losses. We have seen instances, many of you already know that, due to weak implementation. So it's good that we're talking as a front end, the leveraging cloud, AI, and all that. But at the same time, we don't want to implement technology in a hurry without a concomitant control framework that leads to unraveling and huge losses later on. So that's why we say, think in terms of compliance or security by design. You don't want to bring security later, So your security has to happen by design. When ab initio, when you're trying to launch products and processes, this security aspect parallelly has to be factored in. And other aspects again is the data governance, regulatory compliance, and all that. You must be knowing that end of the day there is a rigorous follow-up, because again the size of the bank, threat actors feel that the bigger banks have tightened their controls, but maybe the smaller ones is the ripe for them, because again threat actors also look from the cost benefit analysis. Okay, if they go to a big bank and they find that a lot of controls are blocking them, they're not able to go, they will look at other kind of smaller entities. Let us try out smaller entities. Have they kept some big vulnerabilities open? And unfortunately, all the hard-earned money of employees and customers, we don't want them to be lost to the threat actors. Okay, so that's why the IT governance, the cyber security governance is a critical piece when we think of technology-based transformation for the UCPs. And with that, at the initial perspective, I think I'm not getting into. I can speak a lot on the kind of RBI initiatives on that. You are well aware the kind of efforts that's being taken and all that. And of late, recent years, particularly on the technology cyber front, you must be seeing the kind of focus, the gap assessment efforts by the independent auditors and all that. So the important thing is that we understand, that that profile is trying to move to other groups of entities. We don't want the sector to fall prey to such threat actors, and rather it should leverage the best of the technologies and be the best in whatever it does. Okay, these are my initial thoughts. If time permits, maybe we'll continue with it. Okay, thank you so much. Yeah.
Good afternoon. I am Suhas Patwardhan. I am a chairman of Pune as well as Maharashtra State Cooperative Housing Societies and Apartments Federation. We are a representative body of more than 125,000 cooperative societies in Maharashtra, as well as now we have added cooperative societies as well as apartments also. There are 2 lakhs apartments in Maharashtra State. I'm very thankful that this organization given us an opportunity to represent in this Cooperative Digital Summit 2026. Maharashtra is a very progressive state in cooperative movement in India. We have got a long history like Dhanraj Gadgil, Dr. V.K. Patil, Vasantdada Patil, Sharad Pawar, Ajit Pawar, Suresh Prabhu, then Vidyadhar Anaskar. Now our MP from Pune is Muralidhar Mohbal, is having a Ministry of State Minister of Cooperation, and we have good experience that he is doing a lot of changes in this transition or this transformation in digital units. Our federation is affiliated to National Cooperative Union of India as well as National Cooperative Housing Federation. We have developed 2-3 good initiatives in cooperative movement in digital platform. We have developed first online grievance portal. First online grievance portal in Maharashtra, which is the Sahkar Samvad. You are aware that it was very difficult to go to deputy registrar's office or sub-registrar's office, and there are very shortage of persons. So we have made a first in India, not in Maharashtra. This is online grievance portal, and this is a flagship portal of Maharashtra Federation of Cooperative Housing Societies and launched in 2023. It was launched by our Cooperative Minister Dilip Walse Patil. Society members register grievance portal on which are grievances addressed by the respective cooperative department. Real dashboard for departmental hierarchy and federation authorities are there. We also give modular training for returning officers who have got 250 or below E category cooperative societies. So this is a very unique. Before the launch of portal, members has physically go to registrar office to file a complaint. Now Sarkar Samvad is an online portal. They can upload the document. They can track the process of and status of their complaint. When the complaint is filed online, it gets directed to the concerned deputy registrar or assistant deputy registrar of that area, and they can take the action for resolutions. And after they get the copy of the order, and it is very easy to log in. Department hierarchy consists of there are more than 450 users are there, and we are. It is a dashboard. It is a process flow. Any register, any cooperative member or committee member can register his complaint online. This is the Sahakar Samruddhi. We are fortunate that we have completed in last year. So far, we have received 11,914 in a year, 11,944 complaints, and almost 9,874 complaints are redressed properly to the satisfaction of the customer. So only 77 are in progress, and they are in 15 days, they are likely to resolve. So we have got another. Another portal, which is the legacies, which is support cooperative societies for supporting cooperatives with AI technologies. And this portal is very unique. This also, the object of this initiative supporting cooperative societies with AI technology. The object of this is to provide digital management software and legal support platform for all cooperative societies in the state, to assist them to day-to-day legal and administrative compliances. The platform society manages compliance with cooperative laws. All cooperative laws are in this technology initiative. So cooperative elections, grievance procedure, it will reduce procedures and documents. Society resolution, minutes of meetings, all compliance are there. And legal communications with the district deputy registrar and cooperative departments, that facility is also there. It will help to support the Federation Panel Council and legal expert societies, which will receive consultancy, legal recommendations and guidance for their queries, help them avoid legal compliances and unnecessary expenses. Next. This is a very unique feature that all access to the cooperative laws and legal provisions, assistance drafting resolutions. It is a AI-based, so it will assist you in drafting resolution notices, legal, because you are aware that our cooperative society's member or chairman, secretary is not that way professionally experienced. So it will be very helpful. They will get a reference from High Court and Supreme Court judgments, update all government, state governments and central governments circulars, legal guidelines. So last week only we have signed a memo of understanding with this UNICEF, and it will be launched by our cooperative minister. And all digital record, so you need not keep the hard copy of all your record, and it will be a digital platform. All digital record management, transparency, it will be very easy to keep the records. We have got another initiative. This is Mobile Sutra initiative. It is with we have got a memo of understanding with Mobile Sutra Innovators LLP cooperative. It will most challenging because you are aware that parking is a big challenge, and particularly in metro cities, and you are not aware. So it will help to optimize and clearly mark visitors' parking area, increase the transparency in parking usage, allow society to implement parking related issues and rules and fines, create accurate and digital visitors logs, maximum allocated and common parking slot utilization, general additional income for society as well as to individual members. And security persons can make it use of his productivity, being collaboration and discipline among members and reduce malfrustration. So it will help that when our parking is not in use, members share unused slot with fellow members. Members can set preferred parking slots giving priority to nearby or adjoining building within the society. Members get real-time visibility of access parking slots, etc. So this is very unique in nature, and this is the first time I think in India we have launched this parking. This will help parking in the visitor parking society as well as in your nearby area, which is a common parking. And by public institutes or in malls, and that can be very unique in that. I think these 3-4 initiatives we have done in Maharashtra State Cooperative Society Federation, and we are expected that more digital platform will be given, because the state government and central government has now all digitalized, and we hope that they will get good support. Thank you. Jai Hind, Jai Maharashtra, Jai Sarkar.
Hello. Oh, it's okay. So another angle aspect I was thinking of explaining is on the data governance, the importance of data governance. As you would appreciate, fundamentally, the data is the most important thing. So unless we, get insights from the data, obviously you're not knowing, how the entity is faring. And data is not only about, your financial data. It also means the data on how the technology initiatives, the cybersecurity initiatives are being, are going on. So to that extent, the important focus is presently on the data and the data governance. And you would also appreciate that a new requirement on data privacy coming out from the DPDP Act and the rules. So that further adds requirements on UCBs to protect digital personal data of customers. So again, the fundamentals, again, I'm not getting into the details, is as senior management, again, we are talking in terms of the board. So we were looking at periodically we need to get some idea, some kind of indicators on how our entity is doing vis-a-vis compliance, vis-a-vis risks, and vis-a-vis the objectives and expectations. So in that context, it is imperative that the data security aspect, the data governance, those also form part of the reporting to the senior management and the board. So the first aspect again here is what you call as to what extent, to where and who all are having the critical data. So obviously the main aspect is on the customer personal data, but also your own the financial data, data in respect of your critical systems, your CBS and all that, or certain confidential data lying with the third parties. If it is a vendor is handling some of your systems, obviously the data will also be with them. So from a governance context, we have to appreciate that where my confidential, my customer data, where are the different places and locations and parties that are having this data. Then comes the importance of sensitivity or classification of the data in terms of which of them are very confidential and sensitive, and which of them are non-sensitive. And then you're coming back to whichever are critical and sensitive, which are supposed to be confidential, you're going to see whether have they been adequately protected or not. Now, protection can be in the form of masking. Protection can be in the form of encryption and all that. Okay. So overall, we should have a sense of where my data is there, and get a sense of who all are processing my data, and then differentiate between the sensitivity of the data, whether they are critical or confidential and all that. And then whichever is important, critical and sensitive for the business or in terms of the customers, obviously you're going to look at whether the protection are commensurate with the criticality. And once that is done, you would appreciate that when we talk of a control can only be talked of at a point in time, okay? Control is as of today, because you would appreciate that people, process, technologies keep changing on a day-to-day basis, okay? So as these changes happen, whatever control framework which was working as of today may not work in future, okay? So it's important that the control framework strengthening keeps happening on a regular basis. Controls can only be spoken at a point in time. So this is another important inputs to our board and senior management. So when they get the information, when they get the metrics on the performance of IT and cybersecurity, they would also need to see how that is coming from. What about the reliability? So we're talking of robustness of the data. Okay, so the underlying backbone, to what extent we can rely on this data, is extremely important. So here again, big or small, the important perspective is segregation of duties. Because in fact, our expectation for the bigger banks, it's very deep, but sometimes smaller banks, a single person have to do 2 or 3, but there has to be a mechanism of checking, maker, checker, checking and cross-verifying. The segregation of duties is an important thing when you allocate the responsibilities on people. So again, when you talk of a digital governance framework, there's roles and responsibilities, allocation, whether the duties are segregated, because segregation is extremely important, you would appreciate. Now, otherwise, people are going to do unauthorized transactions, okay? So this is the importance of data, protecting the data so that you get the reliable data, all of them become extremely important in the new scheme of things. And then again, there has to be the questions on, what extent our systems are reliable enough, what kind of vulnerabilities are still open, and what kind of threats can still happen, and what is the compliance level at any point of time vis-a-vis RBI regulation. So you would appreciate again, when we give all these regulations, this is coming out of years of experience. We also know system-wide, we get inputs on the kind of incidents that happen. So when we prescribe, again, there's underlying reason as to why a certain requirement, because we have seen in various incidents, such kind of vulnerabilities being used by threat actors. And you would also appreciate that when major incidents happen, we also have a process of sending advisories to the different entities. So here again, it's important for the board and the senior management to understand the various advisories that periodically come from the regulator or other agencies like the CERTIN, and see that what kind of measures have been taken to address the various control requirements that have been brought out in the advisories. So to summarize again, from the governance, board level, senior management, asking the right questions about the cyber risk posture of the entity, where are we doing well, what kind of indicators we're not doing well, say vulnerabilities, patch management, the network security, or the implementation of appropriate tools, or data protection, and then having a clear plan of action to address them. So again, the focus has to be on the criticality. Critical systems like core banking, or the payment systems, they are critical. If there are any vulnerabilities, any of these critical systems, and obviously that will lead to either internal frauds or frauds driven from external threat actors, okay? So governance is the primary thing, and technology is not a technology problem, it's an overall governance problem, is something to be recognized. And then we keep reviewing this control framework on a regular basis, because technologies change, new versions of software keeps coming, people change, processes keep changing. We need to, and you keep launching new digital channels, products. We need to always think about whether our technology control framework is still robust enough, whether it needs further improvements, okay? So with that, now thanks for the opportunity, and any queries, anytime you can write to us or inform us. Okay, sure. Thank you so much.
Thank you.
I request Dr. Hare Krishna Mishra to present the speakers with the mementos and Shravani to kindly assist.
One, two question answer also. So next we will have the validity section, but we have 5 minutes more time. So can we take 1 or 2 questions in any audience from side? Any questions are there to the RBI or maybe NABARD?
I am Professor Hare Krishna Mishra. I was at IRMA for many years.
Oh, yes, sir.
Yeah. If you look at the entire banking,
Yes, sir.
cyber security, fraud detection, we see that core banking solution is a standardized approach. So when we talk about standardized processes, homogeneous entities, and the transactions are also almost regulated through rules and acts. So why is it that CBS is being promoted by various entities like private entities, some government entities? Why is it not that it's getting regulated centrally so that these, especially cooperative banks, and you mentioned about software as a service. If core banking solution can be a national portal and SaaS can be provided to each cooperative bank, perhaps these capital expenses can be apportioned. What's your take on this?
Yeah. I think, yes, it's an important point what you made about this, the importance of core banking system and different banks having different products and all that. So again, one aspect is that how it has evolved over the years. Again, because the different UCBs again are availing services from different entities at different points of time, and from a purely controlled supervisory framework, in fact, we would look at more from the principles and the key underlying processes. That's again, we don't want to get into one CBS, one uniform aspect. As long there are different players offering and competing and giving the right product to a different set of UCBs. I mean, that's one angle to it. What I'm saying is, that's one angle to it. That different guys have to compete, get the best products. Again, they need to compare with certain minimum expectations on core banking laid out by the regulator. That's one thing. Now, very small entities, probably, again, for example, a single branch entities, again. So like you said, again, it becomes difficult for them to avail core banking from this. So there again, services like what you said, like SaaS, comes in handy. And that is also good because instead of individual entity, spending the capital expenditure, getting a separate product and then maintaining. Buying is one aspect of it. You need to continue maintaining that. And then along the way, if you're not maintaining well, the configuration drift happens and it leads to a lot of incidents. So there again, as you would also seen that NUCFD, the umbrella organization and part of RBI again, as you would also very well be aware, sir, why that is being promoted by RBI. The RBI stated that because the recognition that for the smaller entity, it's rather that certain functions are centrally helped and guided. Instead of each of them having their own, duplicate their own processes, then it may become a bit inefficient. So there again, sir, the effort of organization is again on, for example, on different areas like liquidity management, technology, cyber security. They do a lot of work there. There again, centralizing a lot of processes, cyber security kind of guidance, or even your SaaS-based key technologies, or centralizing key cyber security tools. So the underlying principle you said, sir, that's been recognized by RBI, and the umbrella organization is intended to support the different entities.
And for the larger entities who would rather they maintain well and all that, okay, there are different products, they can always evaluate, the market is there, we need competition and different guys offering products. So that is for the larger entity. Smaller entity, like you rightly said, sir, this kind of centralized support is part, certainly. And that's why the umbrella organization came into. Thank you, sir.
Thank you, speakers. That was a very insightful session. We now move forward to the valedictory session.
Okay. One question. Okay. So maybe we can take one more question, but it will be very brief, 2 or 3 minutes. Any question is there?
This is, thank you very much for
clarification.
Another offshoot of my question. This tax competition of tax. NABARD has been given the mandate to
Tax
competitions. Again, my problem here is that
actually the PACs I am not.
No, that's what I'm saying.
Okay, but from a larger context, you mean?
I'm talking about the regulation.
Fine, sir. Fine.
PACs are the part of the ecosystem. They are all linked to the cooperative banks. Certain cooperative banks are yet to be having CPS. So I see PACs as a cluster for a cooperative bank. So why it is that separate mandates are being given to separate entities? Again, I am advocating that there has to be a centralized system to offset the cost and transaction time, including transaction traceability. So you have to get into, India is not a poor country. There are a lot of efforts are there. We are leading from the front.
Yeah, correct.
Why is it that banks are not coming to that front? And I'm not finding any answer to such type of divergent approaches. Any take on this?
No, that because PACs is again it's the domain of the NABARD. I wouldn't want to venture into that. But the underlying the principles and concept where it applies, I told you, so it's the right thing. For example, I think PACs also our my colleague from NABARD. So he was explaining the kind of initiatives that are going, centralized approach and all. I mean, I'm not privy to the details there. But the underlying thing, that's why the umbrella, like I said, the underlying concept or the economic principle that whenever, it's not economic for a small entity to do certain things, try to do the sharing, through a central entity. That's well recognized. That's how this umbrella entity came into being for the UCB, the overall context from that. Like you said again, the different entities or legacy, the mandates, different regulators, and there are there, and they will have to customize them to the needs of the individual sector. But obviously, this is a well-recognized thing from a generic sense that it has to move to wherever the cost-benefit thing is. It has to move to some kind of centralized support and approach. Certainly.
Thank you, speakers. That was a very insightful session. We now move forward to the valedictory session, Roadmap for Digital Cooperatives, Way Forward and Summit Recommendations. I now invite to the stage Professor Umakant Dash, Vice Chancellor of the Gokhale Institute of Politics and Economics, and Mr. Pravash Pradhan, Convener, Cooperative Digital Summit 2026 and Chief Editor, Smart Agri Post. The chief guest of this session, Shri... I also invite to the stage Dr. K.K. Tripathi, Joint Secretary of the Economic Advisory Council to the Prime Minister, Niti Aayog, Government of India. The chief guest of this session, Shri Suresh Prabhu, former Union Cabinet Minister, Government of India, would be joining us virtually in a short while. Thank you.
Good afternoon, friends, distinguished guests on the dais, Professor Umakant Das, Vice Chancellor, Gokhale Institute, Dr. K.K. Tripathi, Economic Advisory Council to Prime Minister, Niti Aayog, and dear speakers and participants. As we conclude the 2 days Cooperative Digital Summit 2026, the deliberations have offered very valuable insights for strengthening and modernizing the cooperatives and cooperative banking system. And today we have with us our chief guest for the validity section, Sri Suresh Prabhuji, Honorable former Union Cabinet Minister. And he will be addressing virtually the session. So it is, so I will ask my team. In fact, he will be addressing first the validity session, then we will go on the recommendations. I think I will invite Professor Das to read out the recommendation of the 2 days deliberations. So now I invite Sri Suresh Prabhuji to speak to the gathering August audience. Thank you. So I will be inviting our distinguished chief guest for the validity session, Sri Suresh Prabhuji, Honorable former Union Cabinet Minister, to deliver the validity address. Sir, we had 2 days summit focusing on the future-ready cooperatives through digital transformation. So 200 plus participants were there during the last 2 days, and the audience who are sitting with policy experts, technology experts, and also with us distinguished guests on the dais, Professor Umakant Das, Honorable Vice Chancellor, Gokhale Institute, and Dr. K.K. Tripathi, Economic Advisory Council to Prime Minister Niti Aayog. So I invite you, sir, to deliver the validity address.
Hello.
Yes, sir. You are audible. Hello.
Can I speak?
Yes. You can start, sir.
Yes, sir. Yes. So, firstly, let me congratulate the Gokhale Institute for the most prestigious think tank, educational institution, a thought leader into a country for organizing event on such an important topic of digitalization and cooperatives. I'm sorry I was trying to join in for the last several minutes, but it's a challenge of digital platforms that every time you want to log in, there are so many different hurdles you have to cross. So sorry for joining a little bit late. But I must congratulate Mr. Dash and his team for making sure that you are exposed to this very important aspect of two things. First, what is the need for the cooperatives in India? Cooperatives have the ability to transform the lives of the rural people, particularly of those who are truly marginalized. For a simple reason, the very fact that they are so small and they are so marginalized, and they are so much on the periphery of the mainstream activities, the individual cannot do a job that is necessary for his own sustenance, for his own growth, for his own progress. So if such people come together and get a right leadership, you would see a real transformative effect on not just that individual, but also not just the association of the individuals who make these cooperatives, but also on the entire societal aspect of development and growth. So cooperatives are really necessary. And I have limited time of speaking, therefore I'll just go to the some important points. One is that Mr. Amit Shah, who is the Honorable Amit Shah ji, who is a Minister of Cooperatives besides being the Minister of Home, had decided to prepare a roadmap for the cooperatives for the next several years. So he asked me to chair the cooperative policy committee on which Mr. Dash also was one of the distinguished members. And we did comprehensive mapping of the cooperative structure, and we worked on some of the aspects of that, which includes digital. But the principal recommendation of our policy was that digitalization is the only way forward, and therefore, how to go about it. Individual society may not be able to afford the cost of digitalization because technology is developing so fast that there is huge obsolescence that happens. A technology of today may not be valid for tomorrow. And therefore, I had recommended that we should create a cluster of societies who would be able to avail of such facilities from common pool. There could be another cooperative whose job only is to provide such digital services to the user cooperatives. So this was a model that we thought about. Now there are so many aspects of that. One of them is a digital. When you use digital platform, India know the choice. The security becomes very important. Today, most of the transactions are going on cloud, and as you can see, hacking becomes very easy. And therefore, how to bring in security for your infrastructure, for the information, for the database, for your customers, for the personal information, all of that goes into this. How will make sure that there will be a safety security? The cyber security mechanism can be developed. And that again should be done in a manner that probably a group of societies can come together, can get this best of technologies available in the world, and then they can actually use it on a sharing basis. The technology is as good for some time and for any time till it is hacked. So one should not be under illusion that technology can never be hacked. It would be. And therefore, we should be one step ahead of the hackers. And to do that, we must constantly upgrade our own knowledge or understanding and also put tools into place which will ensure that such hacking will, if at all it happens, how can it be detected? How can you take counter hacking measures? Now, there is the session which I just was going through the program. Very interestingly, you are asking a question to yourself. Can cooperative banks compete with commercial banks? Let me give you an example. I was the younger chairman of the largest cooperative bank, Saraswat Bank, 40 years ago. At that time, we went in for a computerization of the bank. We used Finacle, a product of Infosys. Infosys was very young at that time, just born, you can say, and its infancy. And therefore, we did a fantastic deal. And Mr. Narayan Murthy always keeps saying that thanks to some, he gives me credit for no rhyme or reason. But he said because of that, Infosys also could grow. But more importantly, Saraswat Bank actually went into computerization way ahead. And many years before, many commercial banks did that. And we were considered as a model bank, not just in corporate sector, but in the banking sector, for taking such bold and innovative and forward-looking steps way ahead of the time. So therefore, we should not be under a feeling or a sort of a inferiority complex that we are smaller, we are cooperatives, commercial bank can do a better job. No, they can. But it's not because they are commercial, but there is good leadership there. There is good thinking there. So whether you are cooperative or commercial doesn't matter. Thinking makes difference. Your strategy is really is a game changer. And therefore you should think like that and not be overawed by the fact that we are cooperatives and they are commercial, so how can they do it? And then when we are talking about this was the session banking, that's why I mentioned it. But our policy that we actually formulated and thankfully government of India accepted it. Honorable Amit Shah ji unveiled that policy in Delhi, and that particular policy has a comprehensive ideas, and that policy document is smaller because it has to be smaller. But the deliberation that went into are hundreds of pages and which also are available. If you go through that, you can make out that there is already a deep thinking that went into understanding about why cooperatives must do that. Cooperatives are not just in banking, they're in consumers, they're into marketing, they're into processing, multiple activities. Now, just imagine the corporates, where do they source their products, particularly the retail ones who have the valuation of billions of dollars? Where do they source their products from? They get it from the villages. The real mantra of future business is aggregation. If you can aggregate the customers, if you can aggregate your supply chain, You can build up a very efficient customer base. You can actually make sure that your vendors are also part of your very important supply chain. Then only you will succeed in the marketplace. So just imagine at each of these, cooperatives have a great advantage. We will be the best aggregators. We the best. We are the one-on-one relationship with our own constituents. Cooperatives actually provide credit. Cooperatives provide agriculture inputs like fertilizer, pesticide, insecticide, seeds, and many others. There are cooperatives like in Maharashtra where there were the cooperatives for water distribution. Can you imagine? Before we made a probably not such a good decision in hindsight, when in 1948 we nationalized the entire power sector, I was also the Minister of Power in when I introduced all these path-breaking reforms, and that's why from power deficit at that time we became power surplus only because of the reform that had started at that time. But at that time, before the 1948 law, which abolished all structure, there were cooperatives for distribution of electricity. And therefore, now many activities can be carried out by the cooperatives. And digitalization provides us new opportunities. So we should not get afraid about digitalization. We should ride it. We should try to take advantage of it rather than getting worried about digitalization as an imminent danger. In fact, it is a great opportunity to progress faster. So many activities that today we are doing can be done efficiently with cooperatives, but many activities that we are not doing today can be done with cooperatives. Data centers that are necessary for artificial intelligence because huge processing will happen, huge computing will happen, will need electricity. Just imagine cooperatives can get into electricity. Another aspect of all this is why cooperatives have the great strength, great potential, but also are maligned, and for sometimes for good reason. That reason is management. The management depends upon management information system. When I was the Minister of Railways, I had started up world's best and world's biggest, world's first passenger information system, where I used to get feedback from the customers where they're traveling on the train and could redress the grievances on the while still they are traveling. But that also I used it as a management information system to find out why complaints are coming from one geography or from one function like catering or cleaning, etc. So management information system will determine your quality of management, your quality of governance. And now digitalization can help you to develop a good management information system. And not just information system, but also action-oriented management information system. Information should lead to decision making. Just collecting information is not a purpose in itself. You must have the ability to process that information and take requisite action and timely action if there is a likely some fraud. And if you take action immediately, you prevent future penetration of that fraud. And therefore, timely action and also a right action is important, and that is all possible through digitalization. So it actually will be a boon for the entire cooperative sector, and then will not be put to disadvantage against the corporates who are using it in an aggressive way. We can actually be a step ahead of them rather than a step behind them. You can actually use this as a great tailwind for the growth of the cooperatives. This can be an accelerator for the development of the cooperatives of future. And to make cooperatives future ready, that was one of the in fact point that we had very highlighted and deliberated for a long period of time is how to make our cooperatives future ready. And therefore, again, I'm repeating, I'm not just talking about cooperative banks alone, but talking about the entire cooperative sector as a whole, how to make it future ready at a time when the world is changing. We thought that globalization is order of the day, and now it's probably going to be a forgotten story because everybody's thinking about themselves. America first, Europe first. So I do second. Because you're talking about all of that, that means there is no globalization in real sense of the term. So what that means? That you have to look at your own house to put it in order. You have to develop your own systems, your own data, your own people, your own markets. And to do that, cooperatives are the best way because they are the closest to the people. They know the terrain. They know the locale and locality very well more than any other commercial organization. And therefore, just imagine the changing geopolitics and global thinking that is now changing rapidly. Cooperatives could provide a great solution, a great way forward. And therefore, this is a very timely program, my dear friend. This is the program which actually will make sure when you are talking about getting it future ready, you cannot make yourself future ready by ignoring present. You have to be present action to be future ready. So start thinking about digitalization as a way of changing your own businesses. Business, when I say our own cooperative organizations, whatever business we are in. And actually, don't mind by saying that we should be always be conscious that we are in business. And business means we have to actually be working on customer acquisition, customer satisfaction, making sure that we keep developing products that will always be according to the changing taste of the customers. And all of this would require huge amount of data, information, and all of that can be made only by using digital platforms. So I am very sure that we will be actually be benefiting from digitalization more than any other form of organization. And for that, luckily, and I must congratulate the government of India, the Ministry of Cooperatives, and our Honorable Minister, Mr. Amit Shah, or Prime Minister Narendra Modi, for thinking about separate ministry, but more importantly, asking us to prepare a policy to comprehensive, all-encompassing policy to make sure our cooperatives will not suffer from the uncertainties of tomorrow, but in fact, they will be ready to face any contingency of. And my dear friend, Mr. Ramakantash, who is, I'm very happy that he's come here. He was in Irma. Before that, he was in IIT. Just imagine, a person has such a fantastic track record. Technology person, being from IIT. He understands rural development very well because he was the director of IRMA. And now he's looking at this Gokhale Institute, which I said a little while ago. It's actually not just a one institution. It's not a top institution. It was founded by great leaders with a vision that we would need post-independence such institutions to make sure that, friend, I'm now closer to the airport, I'll be boarding a flight. But before I board the flight, I'm very happy that we are all ready with boarding passes in hand to board for few of cooperatives to make sure that cooperatives will fly high, 30, 40,000 feet from the ground, and will actually always be flying higher and higher to make sure that people on the ground, the poor people, the marginalized people, the farmers, the dairy people, don't really need support like viewers and all of that, they will be benefiting from these high altitude flying cooperatives. Thank you, my dear friends. All the best to you. God bless you all. And thank you for letting me come in. Sorry for joining a little late. As I said, this was a problem of digitalization anyway. Thank you very much.
Thank you, sir. Thank you very much for accepting our invitation to grace this valedictory session in spite of your busy schedule. And your reflections on the evolving role of cooperatives in a rapidly changing digital and economic landscape added immense value to the summit's deliberation. And I sincerely thank on behalf of the Institute and the organizing committee, and hope we are going to get you soon to the campus. Should I continue with the? Okay. Now we are in the verge of the say conclusion of this particular 2 days summit. In fact, it gives me immense pleasure to join in the valedictory session of the Cooperative Digital Summit 2026, hosted by the Gokhale Institute of Politics and Economics in association with C2CP.
P2C, sorry. Over the past 2 days, we have had rich and engaging discussions on a theme that is both timely and transformative, as even say pointed out by Suresh Prabhuji. So how India's cooperative can become future ready. Of course, we have to understand the present better in order to be ready for the future, as is rightly pointed out, and the issues that are more important to make it to fly 10,000 feet higher than what we are today. So the discussion across sessions have highlighted, of course, many important issues, but a couple of things which I would definitely like to highlight. Of course, one was again, he rightly said that digital transformation is no longer an optional for cooperatives. It is very much essential for their sustainability, competitiveness, and relevance in the modern economy. Of course, he was citing the exercise that we have undertaken the last couple of years for preparing the new cooperation policy, and the exhaustive consultations that we had with almost all the stakeholders. So the summit featured, of course, 4 technical sessions and 2 panel discussions, which deliberated on the issues, challenges, opportunities associated with the integration of technology and specifically artificial intelligence and in strengthening the cooperative ecosystem. So let me briefly reflect on 3 key insights that emerged from our deliberations. There are many which, of course, 24, 25 deliberate points have emerged from the last 1.5 days. But quickly, just to summarize, first, of course, the digital infrastructure is the foundation of modern cooperative institutions. From digital record system and data platforms to cyber security, which again, frequently it was discussed and deliberated. And even cloud-based services, how we are going to use the cloud-based services technology which can significantly not only improve transparency, efficiency, and service delivery within the cooperative, but also it is going to make it more sustainable and competitive. The second point was about the digital market. Again, there was a separate session yesterday. Digital marketplaces and platforms can dramatically expand market opportunities for cooperative producers by not only linking the entire value chain, but also take advantage of the existing geopolitical scenarios. E-commerce platforms, digital supply chain, and direct-to-consumer models can help cooperatives improve price realization, strengthening branding, and connect producers directly with consumers. And the process, even of course, even which we also highlighted in the National Cooperation Policy, that we need to, even if nothing wrong in imbibing some of the good practices, which are governance practices and other practices which are there in the corporate sector. Third, the financial technology is opening new opportunities for cooperative finance, digital payment. Even today morning, we were deliberating a lot on the digital payment and AI-based credit assessment, insurance, the Seva experience, and FinTech partnership, which can strengthen cooperative banks and enable them to expand financial inclusion while improving operational efficiency. However, again, the summit also emphasizes in equally important points that is technology, which technologies alone is not sufficient. So we need to emphasize on strong institutional governance, capacity building, and digital literacy. Robust cybersecurity framework, not only the panel members have highlighted, even the chief guest in the valedictory session also highlighting about the need for the cybersecurity and other security measures. The regulatory support that enables innovation while protecting members' interests. That's how the cooperative is different from other sectors we run by our principles. So it's not just the profit maximization. We have to take care of the other principles that always we respect in the cooperative sector. So in this context, the discussions during the summit point towards several important policy priorities, of course. First, building a national digital architecture for cooperative, ensuring interoperability and common technology platforms. So though it's both the state subject and central subject, so we have to not only doing things at the center, but that has to be at the same time we have to at the state level also we have to integrate with what the center does or work together in tandem so that we can take advantage of the developments. Second, strengthening cybersecurity and data governance, which will be the essential as cooperative increasingly operate in digital environments. Third, of course, again, integrating cooperative into digital market ecosystems, allowing producers to access wider national and global market. Fourth, investing in training and capacity building so that cooperative leaders, staff, and members can effectively adapt the use of the latest technologies, digital technology particularly. Ultimately, the future-ready cooperative must be digitally enabled, data-driven, transparent and accountable, globally competitive, and most importantly, inclusive and member-centric. Okay, that's why, and that's how the cooperative stands higher than any other structure. The cooperative movement in India has always been built on the principles of trust, shared ownership, and collective aspiration. So as we integrate digital technologies and artificial intelligence into this ecosystem, we are not replacing these values. We are strengthening them and giving them new relevance in the digital age. Let me conclude emphasizing that technology must remain a tool to empower people, not the end in itself. It's just a means. And this means will help us in making the cooperative sector not only competitive but also future ready. If used widely and wisely, digital innovation can help cooperative become powerful instrument for inclusive growth, rural transformation, and economic democracy in Bharat. So again, I would like to thank the organizers and volunteers who worked tirelessly the last couple of weeks to make it a big success. And I also once again thank our distinguished chief guest in the inaugural session as well as the valedictory session, and all the speakers, policymakers, participants, guests, students, faculty, media friends for making it a grand success. Thank you very much. Jai Hind.
Yeah? Yeah. Thank you, sir, for reading out the recommendations during the last 2 days deliberations. The message is very clear. The cooperatives must be ready adopting the digitalization technologies. So they should not be shy away from adopting the technologies. They are equally competitive with their other counterparts or maybe companies or commercial banks. So they should take advantage of the digitalization system. Once again, I express my sincere gratitude to Professor Das, Dr. Ravi Mishra, Dr. K.K. Tripathi, Dr. H.K. Mishra, and Dr. Sagar, and all the eminent speakers who joined in the 2 days program. And also I express my sincere thanks to all the volunteers Professor Saurav Mahanti, and his entire volunteer team, and all other people who have supported and encouraged us to complete this program successfully. I once again thank you on behalf of the organizing committee, and I invite all of you to join the lunch. Thank you once again. Jai Hind.